Welcome back to another episode of Not Financial Advice. My name is Sean, and today is Tuesday, February 27th, around midday. Today, what we're going to be doing is taking a look at Domino's stock, ticker symbol DPZ. They just had an earnings report yesterday, and there's been some movement in this stock, so I thought it might be something you're interested in. So stay tuned. Over the next 5 minutes, we're going to come up with a fair value estimate for DPZ shares, and we're going to get into that right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
All right, guys, I'll ask you to like the video and subscribe to the channel. Let's do a super fast recap on how the portfolio is doing today. Sitting at all-time highs, $72,800. I'm up 0.35% today, which is good for $250 in gains. 0.35% is trouncing the S&P 500, down 0.13%. And let's take a look at my holdings of Domino's Pizza here within my portfolio. So maybe I don't own enough of it, but I do have some. And so I'm up 29.6%. So I've made $58 in this stock. I have $252 worth of stock here in Domino's. So I'm making money on it. I own it. But what's it worth per share? That's what we're going to figure out together right now. Domino's is a cool story because they've actually outperformed Google over the last 10 years. So it doesn't have to be just high-tech stocks that you own. You know, I own this stock and everything's becoming a technology stock to an extent, but I just thought that'd be a cool thing to show you. Okay, so let's get over here and let's figure out what Domino's $446 shares are worth on a per share basis. And so, yeah, here you can see JP Morgan downgraded the stock from overweight to neutral, but raise its price target from 420 to 430. So currently trading at $446. Let's get into the high level metrics. So this is a $15 billion market cap company. So it's a pretty small large cap. I thought the market cap would be bigger than that. Forward PE of 27 and a half. We can see they have a healthy free cash flow yield of 2.8%. And so they're also a dividend paying company, paying a smaller 1.12% dividend at a safe and sustainable 32.4% payout ratio. So as far as thumbs up or thumbs down on this stock, let's start with revenue growth for Domino's. This chart looks nice. Over the last 10 years, their revenue is up 9.5. Over the last 5 years, it's up 5.5. And, I would just have to take a look at this and say that Domino's gets a thumbs up when it comes to growing top line revenue. Looking pretty good here. So let's look at our next metric that's important, which is going to be free cash flow. This is up and to the right. It looks a little bit choppy, but the chart looks pretty strong overall. Over the last 10 years, they've grown free cash flow at about 12.7%. So that's going to be a number I use to base my valuation on here in just a second. But overall, this free cash flow looks really, really strong recently, putting up $436 million in free cash flow. So Domino's earns another thumbs up on this metric. Looking at earnings per share for Domino's, it's up over the last 5 years, about 11.9%. This EPS growth looks really good. Thumbs up. Looking at cash and debt, they've got a lot of debt and they've got some cash. So I will give this a thumbs down. Now, looking at dividends, it doesn't look like they've ever cut dividends before, and dividends are growing at a amazing rate, 22.4% over the last 10 years. So they've never cut. Their dividends growing many times faster than inflation. A thumbs up for dividends on Domino's Pizza. So let's see what else we can find out here. Let's look at shares outstanding. Let's just look over the last 10 years. So they're buying back shares. Looks like we have a little bit of corrupted data here, but this is going at a really nice clip. So thumbs up on buybacks. Taking a look at ratios, we're going to take a look at return on capital employed. Is this right? That's really high. This has probably been something that's driven its outsized market performance. So, um, enthusiastic thumbs up on returns on capital employed. I'm going to take a look into that to make sure that's right, but that's actually shocking to me, and I own the stock. So, learn something new every day. Looking at bottom line profit margin, I really like the way that this looks. So, it's growing up and to the right. This is where they're using digital and apps to drive things, data, things of that nature. So, big thumb up on bottom line profit margin at about 12%, which is really fantastic. So, wow. Okay. Let's look at its historical valuation over the last 10 years. It's trading at a significant discount to its traditional PE multiple. So that's going to be a thumbs up on Domino's for relative valuation. And then expenses, let's take a look here. Um, if this data is right, this would be another thumbs up. So only one thumbs down. That is a pretty good look for this company, trading at $446 a share. All right, let's figure out what this thing's worth. So, using all the metrics that I pulled from Qualtrum, average of free cash flow over the last 5 years was this number. This is their cash on hand. This is their debt, shares outstanding. I've made these, I think, conservative assumptions for future growth of their free cash flow 10% over the next 5 years, 7.5% over years 6 through 10. Terminal rate is 3%, same as GDP. Discount rate is 10%, aka required rate of return. $446 stock. Free cash flow value only 147. Not sure if that shows the whole picture. Let's also take a look at a PE multiple valuation. Okay, and we have our PE or EPS multiple valuation here on Domino's $446 stock, I think it was. And so the earnings per share over the last 4 quarters is this number. The median historical PE is 28.5. I've put in an expected growth rate of their earnings per share at 10% based on Qualtrim data and my own projections. Zero on these numbers, required rate of return 10%. A $446 stock, value based on earnings per share, PE multiple, $417. And so when I look at the discounted cash flow valuation, which showed a fair value of 147, but then I rate it based on earnings per share, I see a value of 417. And so we have a $446 stock. Combining free cash flow and earnings per share multiples, I come up with an average fair value of $282. And so this company is likely overpriced. But I think that with their high returns on capital employed, and their growing top line margin, I can see why the market treats this, stock as a premium valuation at a premium valuation. So, thanks for stopping by. I hope this was helpful. If there's any stocks you'd like for me to review, leave that ticker symbol in the comments below. And until next time, I'm Sean. This is not financial advice. I'll see you later.